Gold pulled back from above $4,400 to around $4,370 on Friday. Silver is holding near $65. If you own either one, you've had a good 2 weeks and a slightly rough Friday. But here's what I actually want you to know before you close this tab. Nothing scheduled tomorrow is going to move this market. Tomorrow's a Sunday. The real test isn't tomorrow, it's 4 days from now. And it's bigger than almost anything that's hit this market all year. Let me show you exactly what's coming and why it matters more than usual this time. Quick recap of how we got here, because it explains everything that's about to happen next. This week, 2 inflation reports landed back-to-back. Wednesday's CPI came in soft. Thursday's PPI, the wholesale level number that often previews where consumer prices head next, also came in cooler than expected. Both readings told the market the same thing. Inflation isn't accelerating the way some feared a month ago, and markets reacted immediately. The odds of the Federal Reserve raising rates in September, which sat around 55% just a week earlier, fell to somewhere in the mid-30 by Friday. Gold and silver rallied hard on that shift, then gave back some of it Friday as traders locked in profits and turned their attention to the Middle East and to what's coming next. That pullback isn't a red flag on its own, it's normal after a fast move. What matters is what happens starting Monday. If the mechanics of why a rate report moves a metal that pays no interest is something you want explained properly rather than just watching the number jump, that's exactly what I do on this channel. Subscribe if that's useful to you. And tell me in the comments, are you holding through next week's Fed events, or are you watching from the sidelines waiting for more clarity? I want to know where this audience actually stands. So here's the actual mechanism in one sentence, because you need this to understand everything that follows. Gold and silver pay no yield, no interest, no dividend. A treasury bond does. When the market expects the Fed to hold or cut rates, the cost of holding a zero yield asset instead of a bond shrinks, and gold and silver become relatively more attractive. When the market expects a hike, that opportunity cost grows and metals face a headwind. That's the entire mechanism behind almost every move you've seen in gold and silver this month. Now here's what's actually landing next week and why this particular week carries more weight than a normal data week. Wednesday, the Fed releases the minutes from its July meeting, the meeting where the committee voted to hold rates steady. But 3 officials dissented in favor of hiking immediately. That's a real split inside the Fed, not a unanimous decision with a couple of quiet holdouts. The minutes will show how seriously the rest of the committee is weighing that hawkish dissent, and traders will comb through every sentence for hints about whether that camp is gaining ground or losing it. Then Thursday, the Jackson Hole Economic Symposium begins in Wyoming, the annual gathering where the Fed Chair traditionally delivers the year's most closely watched policy speech. This year carries extra weight for a specific reason. It's Kevin Warsh's first Jackson Hole address since taking over as Fed Chair in May. Markets have spent months trying to read how much tighter or how much more independent his approach will be compared to his predecessor. A first major speech from a new chair at the venue the Fed has historically used to signal real shifts in direction, landing 4 days from now at exactly the moment gold and silver are sitting near multi-month highs. That's not a normal Thursday. Here's the honest part, and I want to be direct about it. I don't know what Warsh is going to say, and anyone who tells you they know for certain is guessing. But I can tell you what the market will be listening for. If his tone leans toward acknowledging the cooling inflation data and staying patient, that reinforces the mid-30s odds on a September hike and is historically the kind of environment that supported further gains in gold and silver. If his tone leans hawkish, emphasizing that 3 of his own colleagues just voted to hike and that inflation has run above target for years now, that would push hike odds back up, strengthen the dollar, and likely put real pressure on both metals, potentially within minutes of him stepping up to the podium. Both outcomes are genuinely plausible. This isn't a coin flip I'm dressing up as a prediction. It's an honest description of a real fork in the road. Now, The risk in both directions, because I promised you honesty, and that means not just talking up the case that flatters this rally. Both metals remain well below their all-time highs from earlier this year. Gold briefly touched above $5,500 in January, and silver spiked past $120 in the same stretch, before both went through a real, sometimes brutal correction. That history is worth remembering before assuming the next move is automatically higher. If Wednesday's minutes read hawkish, or if Warsh's Jackson Hole tone surprises to the tighter side, expect real pressure on both metals as the market repriced hike odds back upward. At the same time, if both events confirm the market's current lean toward a Fed hold, the case for continued gains is just as real a cooler rate path, a softer dollar, and continued pressure on real yields would all reinforce exactly the mechanism that's driven this month's rally. So here's what I'd actually watch, concretely, rather than just wait and see how you feel about the headline. First, the tone of Wednesday's FOMC minutes, specifically around that 3 official dissent. Did other members push back on it, or did more of them lean toward agreeing? Second, whether Warsh's Jackson Hole remarks explicitly addressed the September meeting or stayed deliberately vagueness itself is information. Because a chair who wanted to signal confidence usually says so plainly. And third, keep an eye on the 10-year Treasury yield during both events. If it falls while gold holds or rises, that's the market telling you the no hike read is winning. If the yield jumps and gold falls with it, that's the opposite signal, and it'll usually happen fast. I'm not a financial advisor, and I'm not telling you what to do with your position going into these two events. That's a decision that depends on your own risk tolerance and time horizon. And nobody watching a YouTube video knows those details about you better than you do. What I am telling you is that the next 4 trading days carry more genuine, dated, foreseeable event risk for gold and silver than almost any other stretch this year. And knowing exactly what's landing and why it moves the price is the difference between reacting to a headline and understanding it as it happens. Tell me in the comments, which do you think moves the market more next week, the FOMC minutes on Wednesday or Warsh's Jackson Hole speech? And once we're through both, I want to know whether you think the no hike case held up or fell apart. I read these, and I'll be back the moment Jackson Hole wraps to walk through exactly what was said and what it means for both metals. If this helped you walk into next week with a clearer head instead of just reacting to whatever headline shows up in your feed, subscribe. I'll see you before the minutes drop.